I wanted to let you know that bigger refunds are coming. They're on the way. We're going to go over in this video what changed, who benefits, and what to expect. We'll also go over simple math and clear timelines so you know exactly when this refund will be coming. And by the end of the video, you'll know if you're one of the 7 groups that will be getting a bigger refund. Let's talk about it. Okay, so the catalyst for this is the one big beautiful bill that passed in July. All right, this is the biggest overhaul in tax changes since 2017. Now, so what we're talking about today applies to 2025 income, meaning the refunds we're talking about will be paid to you in early 2026. Okay. Now, these are new deductions plus timing quirks that drive that bump in refunds. Let's look at some numbers. JP Morgan expects and predicts that the average refund will be around $3,700. That's a $500 increase versus last year, or a 15% increase. Now, your results will vary because these are only averages, right? If you fall into more than one of the 7 groups, then you can expect a higher refund than most people. Now, let's look at what refunds actually are. A refund simply means that you overpaid during the year. So, withholdings from your check or your estimated quarterly payments as a business owner is not the final bill, right? It's only an estimate. So, let's look at an example. We have a $200 that's withheld from someone's check, but they actually only owe $150 when they go to file, meaning that they now get a refund for $50. Now, that overpayment is simply a refund at the time of filing. That's all. So let's look at how the new rules actually create the overpayment. What we're talking about here is the new deductions that start retroactively at January 1st, 2025. Now, the payroll systems that business owners use, right? We're using the old tables for months, right? The old laws. And you paid old law amounts on new law income. This results in an overpayment of your withholdings, which means you get a bigger refund. So let's look at some quick before and after math on this. We're going to look at a simple $500 change here, right? From January to July, you had $2,000 withheld under old rules. New rules say that you only owe $1,500, meaning that $500 difference is the refund boost. Now, there are 7 groups who will qualify for this refund boost. Let's talk about it. Now, the first group who will receive a bigger refund is most Americans, and that's because of the standard deduction increasing, right? We know that the standard deduction increases every year. This year, it's going to increase even more than typical, okay? And the exact amounts depend on your filing status. Now, this automatically lowers taxable income, which reduces the tax that you owe. So for W-2 workers in 2025, payroll over withheld under the old rules, right? Refunds will jump at filing based on the new rules. Let's look at group number 2. Group number 2 is car buyers, right? We're talking about US assembled new vehicles only. All right. This is up to a $10,000 annual interest deduction for loans that originated on or after January 1st, 2025. There goes that retroactiveness, right, of this act. Now, the phase out on this is 100,000 if you're filing single and 200,000 if you're filing married, filing jointly. You do not need to itemize, right? And this is for people who did not itemize. All right. Let's look at group number three. Group number three is parents, right? And why do they get a bigger refund come next year? Well, that's because the child tax credit increased. We went from $2,000 to $2,200 per qualifying child. Now, to get full eligibility here, you have to make less than 200,000 if you're filing single and less than 400,000 if you're filing jointly. Now, refund dynamics will vary by total tax and credits here. Now, let's look at group number four. Group number four is seniors. And seniors get a extra standard deduction this year. That's an extra $6,000 if you're filing single and you're age 65 by December 31st of this year. If you're married filing jointly, you get $12,000 in an extra standard deduction if both of you are 65 and older. Now, no itemizing is required to benefit from this extra standard deduction for seniors. Let's look at group number five. Group number five is tipped employees. This is going to be no tax on tips, but it does have a cap with phase outs. So you can deduct up to $25,000 of tips. And the phase outs on this is $150,000 if filing single and $300,000 if filing jointly, right? Partial allowed. Now, this is not an itemized deduction, so you can still take the standard deduction here. Okay. Group number six is for those who get overtime pay. Now, key differentiator here is that only part of the overtime is tax free, and that's the income tax part only. Let's talk about it. As an example here, you get paid $100 an hour as your base salary. With time and a half, you get $150 in overtime. All right. Only the $50 portion is tax free here. All right. The portion that is strictly for overtime. Now, something you need to know is that FICA, which is your Social Security, and your Medicare still applies to full overtime rate. All right. So you can't get away from paying those taxes there, but the income tax portion you get to deduct. Now, there are phase outs here, 150,000 if filing single and 300,000 if filing jointly. Once again, not itemized. Now, the last group here is group number seven, which is high tax states or people in high tax states. And that's because the SALT deduction was raised from 10,000 to 40,000. Now, this includes state income, local, and property taxes up to 40,000. Now, it makes bigger room for itemized filers in higher tax states. So to get this deduction, you need to itemize. Now, you may find yourself in one of the seven groups here. And if you are in multiple groups, congratulations, you will likely see a bigger refund. Now, let's look at the big picture here. Several benefits don't require itemizing. Beautiful. Phase out caps, the maximum deductions on most things, and state taxes and FICA rules are separate here. Just some things that you need to keep aware of. Now, why this acts like a mini stimulus? Well, millions will be eligible across multiple buckets and groups. Once again, there are seven groups. You might be in at least one of them or more of them. Now, we're talking about a $500 average increase times 117 million refunds equals real cash flow for the economy. And speaking of the economy, we're expecting a 0.5% increase in GDP in Q1 of 2026. Now, that's this year. What changes next year? Well, the take home pay should be up, but refunds will be down later. You see, IRS tables will be updated, and payroll withheld will be less. All right. So your employer's, right, payroll software will be updated to the new rules here. So your 2026 net pay will likely be higher, right? But the refunds in 2027 will likely be smaller because you overpaid less here. Now, let's look at some expectations here. 2026 refunds were inflated by backdating, as we mentioned. 2027 reflects the right size withholdings because of that update. So, no surprise here if you see refunds drop. So, what do you do now? What are the action steps? Well, you want to make the upside work for you here. So, you want to check eligibility for each bucket, right? Are you a senior? Do you have overtime? Do you have tips? Are you in a high tax state? You may be in more than one of these buckets. You want to consider updating your W 4 once the new tables roll through. That way, you don't overpay. And you want to track overtime and tips here to capture the benefits. Now, what I want you to do here is to stay in the loop on these changes. I'm going to track the updates and the edge cases here. I'll post changes as guidance is clarified. We'll cover state wrinkles and payroll timing, and subscribe here so you don't miss any of this. Hopefully you enjoyed this video. My name is Karan, and I'll see you in the next one.